Welcome back. When it comes to home ownership in this country, our next guest says there have been several tipping points over the years that have collectively pushed the Canadian housing market into what he calls sustained unaffordability. For more, we're joined in studio by Hanif Bayat, founder and CEO of WOWA. It is a Canadian personal finance platform. Hanif, thank you very much for coming in.
Thank you for having me.
Here's a graph that you provided to readers of a piece you wrote recently in the Globe and Mail. Here's the graph. The white line, this is housing affordability. What the line tracks is the ratio of home prices to disposable income. So as the lines move higher, homes are becoming less affordable. The price of a home becomes an increasing multiple of average disposable income. And we can see the white line is Canada. It is clearly higher than the other two, which is the US in blue and the UK in orange. Tell us what happened. You point in your piece to the period around 2007 and 2008 for a key inflection point driving affordability, driving home prices higher and affordability down. Go ahead.
So before going to the monetary policy part that happened in 2007 and 2008, I want to talk that the home price is the result of the balance between lots of forces that affecting supply and forces that affecting demand. This is how it works. So the supply part, we typically, when look at it, is there are lots of factors like zoning, for example, And when it comes to the demand part, it's a two-part. One is that end user one, which is the population growth, and one is the speculative one, which is the investors. So these lots of forces together make the home price. And we don't want to simplify here to say that, just this happened because of monetary policies. But what we want to say is that in 2008-9, Canadian housing went to the region of unaffordability that hasn't been there before, and US and UK never experienced that.
Mm-hmm. Why? What happened then?
So that's a good question. So when you look at it, in 2009, it's after the great financial crisis. So you see that all of the countries had a stimulate package. They decreased the interest rate. Some of them even they did quantitative easing.
Yes.
So that's the main thing that happened. There was no population growth. There was no change suddenly to the zoning or anything like that. So we want to see what happened there. That suddenly that ratio went to the 9, means the home price over disposable income, and stayed there since then, and even reached 16, but now is much lower. So what happened there is that this is what we think, is not 100%, bulletproof, but what we think is that in US or UK, there was a real need for a stimulus package. It was a real need to help the banking. It was a real need to help the real estate sector. In the US itself, it was a disaster that time, So the stimulus package was needed. For example, in UK also, there were banks that nationalized because of the exposure that the UK banks have to the global banking. But Canada is different. Every country is different. Our banking sector, actually the most exposure they have is local real estate, which was safe. Nothing much happened if you look at the prices. Then we came and stimulate, which was needed. I'm not saying that it was not needed, maybe too much. We decreased the interest rate, means Bank of Canada interest rate, from 4.5% to 0.25% in the span of 2 years. Means from September 2007 to March 2010, we went to almost zero interest rate. Okay, that was not the only problem. The problem is that we stayed there in the rate between 25 basis point to 100 basis point for 7 years.
Yeah, and mortgage rates were common at about 3% or so. People could borrow mortgage money at 3%. Do you believe we're in a period of sustained unaffordability? That sounds almost hopeless.
I hope not, but I should tell that many people just they don't look as assets differently, but there is a loss of correlation between the asset growth, like gold, stocks, and the home. If we look at the last 20 years, for example, let's start with this one. The value of the average home in Canada in 1988 was 7 kilograms of gold. Now it's 7 kilograms of gold. So just if we talk everything in Canadian dollar, but if you look at the gold, actually the housing market, the home price in Canada hasn't changed since 1988. So that tells me that all of the assets are growing with a speed. So that's a fact. So if you look, for example, in the last 20 years, the CPI was like 2.2% or like in geometric average. But actually the asset inflation means that like the money supply actually increased geometric average like 7% and asset increased with the same speed, you know what I mean? So it's very hard to come out of this unless we make the supply very elastic. Very elastic. When we do very elastic means that the zoning should be decreased significantly. We should be careful about like population growth. And at the same time, always, that's what I'm thinking, we should look at like monetary policies, not in the way that, okay, we should control CPI around 2%, but also what's happening to the assets. Because when you increase money supply in the last 20 years become doubled. In the last 10 years become doubled. In the last 20 years, actually increased 312%. When you make the money should go somewhere. That's a nature. I hope it goes to businesses, but that's a hope. That's not always happening. Actually, what is happening typically goes and find the assets and goes to the home. So we should be careful about monetary policy. That's one thing that always I say. But beside that, we can make the part that is we have a control, make the supply very elastic. Means that make the regulation easier and decrease, for example, like the condo fee or other things that like the development fee that has impact on the cost of the end product.
Prime Minister Mark Carney raising some of those topics today in Ottawa. In fact, thank you very much for coming in.
Thank you very much for having me.
Hanif Bayat is founder and CEO of WOWA.